Well, good morning, everyone, and welcome to the Hummel Group webinar series. We are so glad you've taken time out of your day to join us. My name is Andy Yost, and I am a benefits risk advisor here at the Hummel Group, and I will be your host as we unpack recent information released at both the state and the federal level in response to the coronavirus pandemic. A few housekeeping items before we get going. From an audio standpoint, the audio works great on your computer screen or your computer speakers. If you have any issues hearing us, please dial in. There is a phone number on the Zoom invite you received. You can always dial in and join by audio that way if for any reason you are having issues hearing us. But again, we're going to be covering a lot of important topics today, so we want to make sure everyone out there can hear us loud and clear. Slides and recording. So at the conclusion of the webinar, we will be sending out slides from the presentation as well as a video recording. Anything or want to make sure you heard it correctly, you can go back following the webinar today. Q&A. If you do have a question, which I know a lot of you do during this time, type it in the Q&A or the chat panel. So we are not going to be addressing questions live on the webinar today. We want to be respectful of your time and try to keep this right at about a half an hour. However, we know that you have a lot of questions, so please type those in the chat panel and we'll be following up after the webinar, answering those either directly from your advisor or we will also be sending out an FAQ list and answer your questions that way. All right, our presenters today include Tom Gregory. He is out of our Orville office, and Brian Thompson out of our Mansfield office. So between the two of them, they are a wealth of knowledge, over 50 years of experience advising businesses on their benefits strategies. The three of us represent a larger team of about 18 across all of our locations. So you can see everyone up there on the screen. So we have a diverse audience today. I know we have some current clients that are benefits clients, we have some PNC clients, and then we have people that don't work with us at all. You know, our goal today is to be a source of information, really as we all band together to better understand the information that is honestly changing daily. So if you are a client, please reach out to your advisor directly. If you are not a client, please reach out to us either through email, and we are happy to answer any questions you may have. So on our agenda today, we are going to be going over the Ohio Department of Information Bulletin that was recently released a week or two ago. Tom is going to be covering that. We are also going to be covering the Families First Coronavirus Relief Act, or the FFCRA. And then to wrap it out, we will be covering just some benefits considerations for your business. We do throw a disclaimer out there. While we are advisors, we are not lawyers or accountants. So if you do have specific questions about the tax implications, which we will touch on briefly today, but we encourage you to reach out directly to your accountant. So perhaps the most important thing is the resources. So there's a lot of information out there, and the CDC is a great source of information, as is the DOL. We also have on our Hummel Group website a coronavirus resource page. So if you log in there and go to our website, you can find information there just to keep you up to speed. All right, well, without further ado, I'm going to turn it over to Tom Gregory, and he is going to be covering, again, the Ohio Department of Insurance Bulletin that was released a few weeks ago. So, Tom?
Well, thank you, Andy, and good morning, and thanks for joining us today. My name is Tom Gregory. I'm one of the benefits advisors here at Hummel Group. We know that many of you are facing challenges with the coronavirus outbreak, and we wanted to bring some information today related to your employee benefit plans. So the first thing I'm going to do is give you a timeline of the Ohio announcements related to the ongoing crisis. On March 9th, Governor DeWine declared a state of emergency to protect Ohioans from the COVID-19 outbreak. And then between March 13th and March 21st, Governor DeWine began the process of closing specific businesses such as restaurants, theaters, park salons, and senior centers. And then finally, on March the 22nd, Ohioans were put under a stay-at-home order which resulted in the closing of non-essential businesses. Recognizing the impact on potentially thousands of laid-off workers, the Ohio Department of Insurance issued Bulletin 2020-03, Health Insurance Coverage Flexibility for Ohio Employees. This morning, I'm going to share with you the key points of this bulletin, including employee eligibility, grace period for premium payment, continuation of coverage, and special enrollment. So the first thing I'm going to talk about is the eligibility provisions that are in this Ohio Department bulletin. Insurers must permit employers to continue covering employees under group health insurance policies, even if the employee would otherwise become ineligible due to a decrease in hours worked per week. Insurers are also required to permit employers to continue health insurance for employees regarding actively at work requirements. So where this is coming from is many of your contracts, your group health insurance contracts, contain either an actively at work provision or a minimum hours worked provision. So this is relaxing those that language that's in your insurance contract. I should add, though, that this is not making your part-time employees now eligible for insurance. So for example, if you have someone that's been working for your company 20 hours per week, they were not eligible for your insurance, this is not now making them eligible for your insurance. It's just saying that anyone who was previously eligible for the insurance, where their hours have been reduced, you as the employer have the option of keeping them on your insurance. So a couple comments here on these. The first directive is aimed at insurers and does not state that employers must change their internal policy for laid off employees. It does, however, give employers the flexibility to continue coverage for laid off employees. You can require employees to pay their portion of the cost during a layoff. We've been hearing a lot of different things from our employers on how they're handling this. Some are, trying to make that deduction from their last paycheck before they're going to be laid off. Others have told us that they're deferring the payment until that employee is brought back from layoff. You can decide what you're going to do with that internally. Second, continuing coverage for laid off employees does need to be on a uniform and non-discriminatory basis. You should not allow some employees to continue during layoff when others are being terminated from the plan. That would not be on a uniform and non-discriminatory basis. Another item addressed in the Ohio Department of Insurance Bulletin is that insurers are prohibited from increasing rates due to a drop in enrollment from the COVID-19 outbreak. Whether you know it or not, many of your contracts state that if you have an enrollment change of more than 10%, that the insurance company could come back in and take another look at your rates. And what they're telling us is that will not happen during this time. Okay, the next thing I want to talk about is grace period. In anticipation of the disruption of business revenue, insurers are required to extend their regular grace period to 60 days. So if you have not paid your April invoice and you believe that you need more time, you can defer this payment until the last day of May. This is not a premium waiver or a premium holiday. An all-back premium will be due to avoid an interruption of coverage. If you need to take advantage of this extended grace period, please contact an advisor here at Hummel Group for further instruction. At this point, Medical Mutual is the only company that has announced that they are not asking for an approval to extend your grace period, but our other insurers at this point are asking for notification to take advantage of this extended grace period. All right, the next thing I want to talk about is continuation of coverage. Let's say that you have employees that you're going to be laying off and you choose not to continue their coverage under this provision of allowing laid off employees to stay on your plan. As previously mentioned, you're not required to continue coverage for laid off employees. If you choose to terminate their coverage, you will need to offer either COBRA or state continuation based on your group size. Employers that employ 20 or more employees will offer COBRA just like normal. You will need to have at least one employee actively employed. So if, for example, you terminated your entire workforce, terminated their employment, they would not be eligible for COBRA if everyone was gone. So you have to have at least one active employee in order to offer COBRA. Employers that employ fewer than 20 employees will offer state continuation, which is similar to COBRA with some exceptions. For example, for small employers, if your employee is eligible for a spouse's or their parents' plan, let's say if they're under age 26, they are not eligible for. If no active employee is being covered under the plan, COBRA and state continuation are not options. So you have to have somebody on your health insurance plan to maintain the health plan in order to offer continuation in this way. This is where choosing to continue coverage for laid off employees may be a preferred option, obviously when feasible. Okay, so in case you're in a situation where you cannot keep your company health insurance plan due to maybe a permanent shutdown, special enrollment is available for your employees in the individual marketplace. And this works, there's two ways that this can work. Employees who lose coverage are eligible for a special enrollment period to enroll in individual insurance on either the marketplace exchange, and this is done where your employee can go to healthcare.gov, apply for individual coverage, and be evaluated for a premium subsidy, also known as a tax credit. Plans that are purchased through the marketplace exchange at healthcare.gov are effective the first day of the month after enrollment. That former employee would also have the option of purchasing individual health insurance directly from an insurance company doing business in your county. And for those purchasing individual policies sold outside of the federal marketplace exchange, insurers will waive the normal special enrollment procedures and allow applicants to obtain coverage effective the day after their loss of employment. So off exchange plans, they get coverage the day after they lose employment. On exchange policies are the first of the following month. All right, as you can imagine, there are new developments each week, sometimes each day. We will continue to update you on carrier-specific information as it becomes available. If you have any questions about your plan, please contact the Hummel advisor for more information, or we are updating information on our website as more information comes in. So thank you for your time here this morning. I'll turn this back over to Andy Yost to continue with our presentation.
All right, hey, thank you very much, Tom. Really appreciate it. And again, if you have any questions, like he mentioned, please reach out to your advisor. All right, so Brian Thompson is going to walk us through the FFCRA, which was launched at the federal level here a week or two ago. So Brian.
Thanks a lot, Andy. Good morning. Again, my name is Brian Thompson, and we really appreciate your time today. I intend to give you an overview of the Families First Coronavirus Response Act, also known as FFCRA. However, please keep in mind that things are changing daily and that we are in an unprecedented time period and everything is very fluid. And as we go through this, you'll see some things that have actually changed very recently. So to start, the Families First Coronavirus Response Act was enacted on March 18, 2020. It did not go into effect until yesterday. So April 1st, 2020, this went into effect. Very, very important to understand that anything that you have done prior to April 1st does not fall under the FFCRA. This will stay in effect until December 31st, 2020, as it currently stands. Some of the highlights of the FFCRA. We're going to hit on three specifically, but there were a few others. The first being expansion of FMLA, expansion of employer paid sick leave, food assistance programs, expansion of unemployment insurance with relaxed qualification standards, increase in Medicaid funding to states, which as of today, 40 states have actually applied for this. And the last one, which is the one that has changed most recently, is mandates for health insurance coverage due to COVID-19 relating to testing. So let's start first with the emergency family medical leave expansion portion of this. Under current regulations prior to the pandemic that we were going through, FMLA only applied to employers that had greater than 50 employees. However, with this expansion, it now is for employers who employ 500 or fewer employees, as well as all government employees. They are to provide up to 12 weeks of leave under this expanded family medical leave for an employee who is unable to work or telework. And again, I'm going to stress also telework is included due to the need to have to leave to take care of a son or daughter under the age of 18 in which their school or place of childcare was closed down or is unavailable due to an emergency related to COVID-19. Now, any employee that has worked for you for over 30 days is eligible for this benefit. The benefit works the following way. The first 10 days of leave are unpaid. Now, an employee could elect to take PTO that they have, any sick leave that they have in order to get paid during those 10 days. But if they don't, it's unpaid. After those 10 days are up, the worker will receive benefits from the employer of at least 2/3 of their regular rate of pay, consistent with the number of hours that they would have been expected to work. This cannot exceed $200 a day or $10,000 in the aggregate. Now, we'll discuss something down the road in regards to the Department of Labor stating not to exceed $12,000, and I will come back and give you the reason why it's the difference between the 10 and the 12. So here's an example. So Susie has worked for her company for 5 years. Throughout that time, the employer has grown to over 150 employees, and she currently takes home $3,000 a month. Susie's son, who is in the 4th grade, is no longer able to go to school due to the fact that the school has been closed due to COVID-19. So Susie must stay at home to take care of her son. At this point, Susie cannot telework. So she would be eligible for the benefit. And under the way the benefit is paid out, the first 10 days that Susie was at home would be unpaid. However, Susie elects to take vacation time to continue to receive income. She could also, and this will be in the next slide, receive paid sick leave that would also pay her for those 10 days. After those 10 days are up, she would receive a benefit from her employer of 2/3 of her income up to the maximum of those $200 a day. Under her scenario, she would receive $2,000 a month for that 12-week period of time. Now let's talk about the other component, which is the emergency paid sick leave. This is also for the same size of employer, so the same criteria. Employers that have less than 500 employees and all government employees must be provided paid sick leave off if they are unable to work or, again, telework due to a leave because of COVID-19. All employees are eligible for this benefit regardless of the time they worked for you. So if you have an employee that's only worked a day, they're eligible for this benefit. Now, this benefit is divided into 2 components. There are sick reasons that somebody could get this benefit, and there are care reasons. On the sick reason side, if the federal, state, or local government has issued a quarantine order, a stay-at-home order, or an isolation order for your business, that is considered a sick reason. If a healthcare provider has advised an employee that they need to be self-quarantined due to maybe an interaction with somebody who has COVID-19, again, they would qualify. And lastly, under sick reasons, if an employee is experiencing symptoms and seeking diagnosis, they would also qualify. Under the care reasons, an individual would qualify for this benefit if they're providing care to a family member who is subject to a government quarantine, or a healthcare provider has told that family member that they need to be self-quarantined. And lastly, again, also, as I stated, if you're providing care for your child under the age of 18 due to the fact that their school or child care provider has closed, you can also receive this benefit. So how is this benefit paid out? So a full-time employee would receive 80 hours of paid sick leave. A part-time worker would receive paid sick leave equal to the scheduled or normal work hours that they would receive on a regular rate of pay. Again, divided between the two sick reasons or care reasons. Under the sick reasons, an individual could receive up to $511 per day, or an aggregate of $5,110 in the aggregate. You cannot exceed either one of those. On the care reason side, they can receive up to $200 a day or $2,000 in the aggregate. Again, that's the maximum. So an example of this would be Jim took a job back in January where he is employed full-time. Jim is not feeling good, so he goes to his primary care physician. The doctor believes he has the coronaviruses and advises him to self-quarantine. Jim would receive 80 hours of paid sick leave at 100% of his hourly rate. It's not to exceed, though, the $511 per day. Okay, this slide we're going to talk about, there are tax credits component of this act. Again, as Andy stated at the beginning, we're not accountants, but we did want to give you an overview of this and would advise you to reach out to your accountant for a more in-depth analysis of how these programs could affect you and what kind of credits you would be entitled to. So under this program, what the federal government and this act has stated is that if you have individuals that go on the extended FMLA or the paid sick leave, and you're also providing health insurance, employer-sponsored health insurance during that time, you can get a dollar-for-dollar tax credit immediately against those costs by using your federal payroll taxes. And those federal payroll taxes include not only the withheld taxes from your employees, but also those matching contributions that you as an employer must also do. You can hold those in your account to offset any cost that you have in regards to the paid sick leave or the extended FMLA. So an example of that would be Bob owns a manufacturing plant and had an employee that had to go on sick leave due to contracting COVID-19. Bob paid $5,000 to cover the employee's sick leave. Under normal circumstances, Bob would have deposited $8,000 in payroll taxes. Those would include the matching contributions as well as what they was withheld from the employees' tax for their taxes. Under the provision, Bob can use the $5,000 that he used towards the employee's sick leave, offset against his deposit, and pay only $3,000. Again, this is an overview. Please reach out to your accountant to get a more in-depth analysis. Okay, now we're going to talk about coverage mandates. And as I stated at the beginning, this is the one that has been very fluid very recently. So according to the Ohio DOI Bulletin 2020-05 and FFCRA, all group health plans were required to cover COVID-19 testing that was approved by the FDA without the patient being subject to co-pays, co-insurance, deductibles, or any type of pre-authorization. They were also to cover medical care and items provided to the individual in connection with obtaining that diagnostic test. Now, as of March 25th, Aetna, which is now owned by CVS, came out and stated that they were going to cover all costs related to COVID-19, including inpatient, outpatient type procedures, RX, et cetera, at no cost sharing on the from the patient standpoint. As of this morning, Humana, Cigna, United Healthcare, and Anthem have all followed suit. So in a nutshell, all major national carriers have basically stated that anything related to COVID-19, from a patient standpoint, there will be no cost sharing. Everything's going to be covered by the plan. This includes commercial insurance, Medicare Advantage plans, Medicaid, CHIP, and TRICARE. Additionally, in the state of Ohio, it was stated by the Department of Insurance that an insurance company must cover all in-network and out-of-network emergency services exactly the same. And there cannot be any balance billing if it's an out-of-network related to COVID-19. So benefit considerations. As you can see, everything is changing very quickly. And we are here to continue to keep you updated on those changes to your benefit program. So first and foremost, as you saw, COVID-19 testing has now gone on to anything related to COVID-19 that insurance companies are now covering with no cost sharing. Also, the IRS ruled in Notice 2020-15 that your high deductible health plan, your HSA plans are to cover all COVID-19 testing prior to deductible. Lastly, we've looked into cafeteria plan elections. And again, this would be your FSA or your dependent care. And can you make changes to that? As of right now, there has been no guidance to state that due to COVID-19 that anything is changing here. So the only way to make a change to your FSA amount is if there is a change in your employment status. So if you do have an employee that goes from full-time and you furlong them or you lay them off, that is a change that they could make a election change to their FSA account. On the dependent care, most dependent care plans have got a 6-month window to make a change. You can make a change at that point. Again, this is very fluid. That could change down the road. So what happens next? As we stated, this FFCRA just went into effect yesterday. So things are going to be a little crazy here for the next couple of weeks, trying to figure out where you fall, where your employees fall, etc. And again, we're going to be here for you. There is some guidance, and it's an emergency guidance, and it's called a small business exemption that basically applies to anybody that has less than 25 employees. If you deem as an employer that, and you have less than 25 employees, that implementing the extended FMLA or the extended paid sick leave could be detrimental financially to your company, you can apply for an exemption to keep you out from having to fall underneath of this act. Again, there's more guidance coming on that, and I would continue to reach out to your attorneys or your accountants for more guidance also. There are posters that are available that you can post up at your workplace to give your employees some information in regards to FFCRA, how it applies, etc. We believe that's very important. And then lastly, back on March 27th, President Trump signed the CARES Act. And this is a new act that came into play. This is the $2.2 trillion program that everybody's been talking about. It's very new, but the one thing we did want to give you some information on is that starting tomorrow, there is a $350 billion pot of money that exists that if you as an employer are willing to keep your employees on payroll and continue to pay their benefits, etc., that the federal government through the SBA would give you a loan for up to 8 weeks of those costs. And if over that 8-week period of time, you don't lay anybody off, you keep your payroll numbers as they are, you don't lower or cut people's pay. If you do all those things, at the end of the 8 weeks, they will actually forgive that loan. Just remember, the pot is only for $350 billion, and when it's gone, it's gone. So considerations for employers. The first thing that I'll start out with is what can you do versus what should you do? And then we add to that, what are you trying to do? Everybody's situation is going to be unique. That's one of the reasons why we stated that we were not going to take questions during this presentation, due to the fact that everybody's situation is going to be unique and different. We are here for you, and if you have a situation that you want to try and accomplish, please reach out to one of our benefit advisors, and we'd be more than happy to figure out what are you trying to accomplish and how does it fit into these new rules and regulations? Because if we can do that, we can put some puzzle pieces together for you. Another important piece is continue to communicate with your employees, and we have got information that we can give you to communicate information to your employees. We want to consider employees' morale. Also, what's the impact on future operations? We must just continue to stay on top of that. And again, that's all about communication. Long-term, establish some type of a COVID-19 or a pandemic response, and stay up to date on all the factual resources. Again, thank you for your time. I hope we were able to give you some beneficial information today. And now I will turn this back over to Andy.
Hey, thank you very much, Brian and Tom, both. And thank you guys for attending this today. We hope, like Brian mentioned, you found some good information here. If you do have questions, again, you can pop them in the chat box here or email questions@hummelgrp.com. For the latest that I mentioned before, you can go to our Hummel Group Coronavirus resource page. You can also follow us on Facebook and LinkedIn, where we are updating information there. And stay tuned for opportunities. So at the conclusion today, you guys will be getting, like I mentioned before, an email that includes the slides of the presentation as well as the video recording. In addition to that, you will be getting a survey. If you could just let us know how we did, we'd greatly appreciate it. So again, thank you guys for attending, and have a great rest of your day.